What's up, investors? It's the Russian dude. In today's short video, let's briefly talk about a very unusual way to make money on the stock market, which kinda seems logical, but at the same time it's extremely controversial, and don't worry, everything we're gonna talk about in today's video is legal. So long story short, according to research by a company called Research Affiliates, they saw a pretty good and interesting tendency, which is extremely controversial at the same time, on the stock market and how to potentially people and the market participants can extract profit from this volatility. And long story short, you obviously guys know about the major indices, the S&P 500, Nasdaq, Russell 2000 and so on. And obviously, sometimes these indices they have to be rebalanced. Some new companies enter the index, which basically means some other ones they have to be removed, because it can only be 500 companies in the S&P 500 index. It makes sense, right? And the tendency what they saw is that as soon, for example, as small minor companies being removed from the S&P 500 index because it is no longer big to be a part of this index, theoretically it only makes sense that the company's valuation will start to go down because, I mean, it is already small enough, it lost so much value, so the only way forward is even more down, right? Well, apparently that's not exactly the case. According to this research, once again by Research Affiliates, they found that as soon as the small company is getting removed from the index, apparently its share price in the near future starts to go up, sometimes even beating the performance of the index itself, which it used to be a part of. And the reason for this is once again kinda unusual. It is not something what you should think about immediately when you think about this problem. Because thinking about this logically, when a company gets removed from the index and then those ETFs and fund managers they have to rebalance their own index tracking funds, basically what happens is they also have to start selling this company, creating even more selling pressure. And yes, this is exactly what happens in the first several days or potentially weeks. This is when the price of a company indeed goes down faster than the performance of the index. But then, when the company becomes severely oversold because these fund managers they have no other choice other than to sell this company, it only makes sense that once again the company becomes severely oversold, creating pretty good opportunities primarily for traders rather than investors to make a quick buck out of this volatility. The company becomes extremely oversold, the valuations become dirty cheap, they just invest in this company, probably even holding this position no longer than several days and weeks, and most likely, in most cases, not all of them, once again according to Research Affiliates, the price of the company inevitably in the near future only goes up. And the very same thing happens on the other side of the very same story whenever a company gets added to the index. Once again, let's say, so for example, the S&P 500. Those same fund managers, they have absolutely no other choice other than to start buying this company because it just recently got added to the S&P 500 index, and if their funds, they track precisely the combination, the companies inside the index, they have to do exactly the same, start buying this company. This creates an massive buying pressure on the stock, which in most cases is a small company with lower liquidity, which potentially in most cases increases the share price in the very near future, just several days ago. But then, once again, market participants see that this particular company becomes overbought, then this is when short sellers, they activate their positions, they start short selling this company because inevitably, according to the balance of nature, balance of financial world, inevitably something what goes up significantly should go down to come back to its more or less meaningful numbers. This is just one of the ways the market in general restores the stability and restores the real numbers, the real valuations which each particular company deserves. And as you can see, it works in both ways, whenever either companies get added to the index or whenever they get removed. But guys, please don't forget that this is still not yet 100% proven trading strategy. This is just a data based on this Research Affiliates company. They release their findings and I'm here on YouTube just present you this data. Please do not put your entire life savings trying to gamble with money buying and selling stocks. This is just a food for thought, something that would potentially you might explore on your own in more details in the future. Well, there have it. Thank you so much for watching. Please like this video and subscribe to my channel. This was interesting, informative for both, and see you tomorrow.